what are the different type of investment accounts that we could look at doing for retirement? This would be like at our level that we can understand.
Absolutely. So the first option is a self-directed investing account. So self-directed investing account is where you can log into really most financial institutions or your primary bank, and you can open up an investment account either on the online banking platform or even on the mobile platform. But you can go on and open an individual brokerage account on that self-directed platform. Also, you can do a full service brokerage account where you get the opportunity to work with a wealth management advisor like myself. You can also move forward with a managed account, and of course 401ks. And if you've heard of annuities in the past, those are also other type of retirement investment accounts that you can establish.
Awesome. Any questions, guys? So I know I initially started off with retirement account through my job, but then as time went on, I learned about different options, right? So I learned about a Roth IRA, and I was like, oh, okay. So there's one you can do pre-tax, and there's one that you can do that's, after you've already paid taxes and you just want to put the money in. And so I started a Roth IRA. And then as I left the job, I was like, well, what do I do with the money? And so when that happens, what should an employee do if they leave one job and, say they go to a different job? What should they do, Andy, with that money?
So you have a couple of options, right? When you do leave your previous employer, most employers have I would call it kind of like a holding company, right? One of the more popular companies is Empower. So they're typically the ones that are holding the retirement accounts for these companies. And so what you can do when you leave your employer is, first, when you get to your next employer, is ask them if they do offer a 401k, and if you can roll over your previous employer 401k to them first. And the reason I say that is because typically your 401ks have lower expenses for you. Or you can also meet with a financial advisor and have a discussion around what you like to do with those retirement assets. And if you decide that you like to roll those assets over to a retirement account, you can either establish that retirement account on your own, again, a self-directed IRA or a self-directed Roth, or you can work with a financial advisor and establish either a managed account, a brokerage account, or some sort of investment vehicle that allows you to transfer those retirement assets into a new retirement account.
Awesome. Yeah, I know that comes up a lot. People go, what do I do? What do I do? And so my husband, he's self-employed. Mm-hmm. And so how has that worked for you for retirement?
Well, depending on the bank, now that we are with the bank that we are with, it's pretty simple. It's pretty simple. Right from my mobile app, I can control things. I can look and see exactly what's there. When things are rising, I get to see it real time. So it's on my phone. So I don't have to make a phone call. I just open my app and look like just at my accounts. So
yeah, that's important. Kay so blessed. Hi, Kay. Yeah, that's really important, guys. We tend to look at our checking account all the time, right? Because we're budgeters, so we check our checking account. But we should also look at our retirement account. This is our money, and what you value, it will grow. And so you should be looking at it and managing it. And yes, sometimes it'll go down and it'll go back up, but you want to be aware of what it's doing and whether you need to call your advisor and say, should we make some changes? So the only way you're going to know that is if you get on that phone and you look it up and you see how your account is doing and how much money you're making. So excellent.
And Onyx, I would like to just take a step back and say, what your options are with that retirement account. The first option, of course, is you can leave it with the company that it's currently with, because again, typically the expense ratios are a lot lower. The next option is maybe you need the funds and you can request those funds to be sent to you in a lump sum. However, keep in mind that most of those assets have not been taxed. So if you do request for it to be sent to you in a lump sum, you would have to pay taxes on the amount that you decide to withdraw. And that amount will also be added to your annual income in the year that you decide to take it. Or your other option, of course, is to roll it over to another institution.
Yeah. Yeah, I will say, guys, when we set up our money and we put it in different buckets, if it's in the retirement bucket, you need to really try to keep it in the retirement bucket. We have other envelopes that we set up for emergencies. We have envelopes we have set up for household. We have envelopes for car maintenance. There's Buddy. Hey, Buddy. Yes. And so if you have a money in your retirement bucket, you really need to leave it in the retirement bucket, because as Andy pointed out, if you take the money out, there's some negatives that go along with that.